Hey YouTube, welcome back to Love for Crypto. This is a 4:30 AM special edition roadside markets and economic outlook video today. There's a lot of excited people throughout Twitter, throughout Telegram, Instagram, YouTube, all calling for bull season. We've seen a catastrophic rise in Bitcoin over the past 24 hours from the regions of 4,100 as high as 5,100, and we appear to be climbing back up to that 5k mark with Bitcoin. We've seen slight bleeding out of Bitcoin into alts. XRPs touched as high as 36 cents from down from 31 cents. We're basically seeing a 20%, 15%-ish rise throughout the board in the crypto markets, which is nice to see. You know, we've been suppressed price-wise for a long duration, and it appears that the bulls have finally broke through the resistance barrier of the bears, and we're seeing some positive upward movement. Now, personally myself, I'd be very, very cautious about what is happening at the moment. Myself personally, I'm not entirely convinced that we've seen the end of this bear market. Again, my days of speculating over price have long gone. You know, it's basically pissing in the wind in this market. You never know what's going to happen. As we've just seen, you know, a 20% upward movement within a 2-hour period. I think we're talking around 36 to 42 billion added to the overall market cap in cryptocurrency over the past 24 hours. And it just really goes to show how quick this market can move, in which direction it does determine. Again, we're seeing a lot of, you know, FOMO hype. We'll probably start seeing a little bit more new capital moving into the markets due to the upward move of Bitcoin. You know, we've seen it being plastered over mainstream media. Bitcoin bulls are back. You know, it was only 6 months ago CNBC did a Bitcoin funeral, which makes you laugh, really. But again, for myself personally, I just genuinely don't think this is it. You know, this could be a big short setup for all we know. It could be the reversal of the market. The bottom may well be in, and we could start seeing that gradual, steady increase in value moving forwards. But again, you know, it's nice to see. It's nice to see a bit of optimism in the space for once. You know, we're talking about a 15, 16 month bear market, suppression, mainstream media suppression, negativity and FUD. Has the job been done? Has the flush out and the cleanse of the market been carried out enough now to be able to substitute the reversal? Again, who knows? It was just a good talking point. The main chunk of this video, we will be speaking about the economic outlook. Now, if we go back to September 2018, in fact, if we go a little bit earlier before that, around April, June, we were seeing the all-time highs of the Nasdaq, the S&P 500, various other markets throughout the world, your Dow Jones Industrial Average. And you know, on this channel, we was calling the top. We was calling the tops when Amazon was hitting $1 trillion valuations, when Amazon was hitting $1 trillion valuations. And you know, we basically said it was all fakery, it was all mainstream media narrative, it was just the propping up of the markets. And we did call the top to complete accuracy, in all fairness. We come over to September, we heard the aggression from the Federal Reserve in regards of interest rate hikes and the auto dewinding of the balance sheets from central banks throughout the world. Now, in September, we were speaking about QT. We were speaking about the possibility that the Federal Reserve was looking at doing rate hikes 4 times throughout 2019. And then here on Love for Crypto, we did a special edition economic video around December. Basically, speaking about how the Federal Reserve had lost complete control over interest rates in the bond markets. We were speaking about the yield curve inversion. We were speaking about, again, the autopilot of the balance sheet unwinding of the interest rate increases will continue. And we said in December, the Federal Reserve have lost complete control over the US Treasury markets, and something catastrophic needs to happen. And during this time in December, the US markets especially was in ultimate free fall. And when I say free fall, I mean they was falling off the edge of a cliff. And again, in that video, I think it was at the back end of December, early January, we've seen a reversal of those markets. We've seen a bottom well and truly called in. And from that bottom, we've seen a catastrophic rise. I think it was potentially one of the greatest quarters since 1989, I think, if I do remember correctly. So what has happened? What's happened in these markets? Well, again, in December, we did say the Federal Reserve have lost control. They've lost control of the US Treasury markets. Again, the central banks are the biggest buyer of equities, and when we say that, we are talking about US stocks. We're talking about, obviously, your NASDAQ, the S&Ps, and obviously the Dow Jones and so forth. Now, we illustrated the chart, and we were showing the unwinding of the balance sheets of the central banks throughout the world, and then all of a sudden we've seen this, what I would like to call, catastrophic rise of re-adding back to the balance sheet. So, the monetary policy of the Federal Reserve completely did a 180-degree turn. We've seen adding on the balance sheets, and in turn, we've seen the stock market surge back up to its all-time highs. So what changed? Well, as we predicted in December, when the rest of the world was expecting interest rate hikes from the Federal Reserve, we did call a neutral bias on interest rates. We've come to March, we've heard the Federal Reserve, they've come out, and again, their outlook, their opinion, and their aggression in interest rates, in the balance sheets unwinding, again, have completely ended. In March, we called for it. In fact, it was even earlier. We talked about quantitative tightening being dead. Now, the Federal Reserve attempted to tighten. They attempted to unwind the balance sheets. They attempted to increase interest rates. And look what happened to the US markets. It was an assassination of those markets, again, because the central banks are the biggest buyers. Now, in March, we're hearing about how the Federal Reserve are going to remain patient with interest rates, how they're going to add back to the balance sheets. I believe the Federal Reserve's balance sheet currently is around 4 trillion. Don't be surprised to see that at around 8 trillion before the end of the year. Again, QT is dead. They have attempted to normalise interest rates and they've failed miserably. The markets was in free fall. We can see how much Donald Trump is trying to prop up those markets to the best of his ability. And in all fairness, he's done a very fucking good job of it. I will hold my hands up. He's done an excellent job of it. But now we're in a catch-22 situation. In a recent podcast, the Fireside Chat that we did, I did a little talk on this. And we are about to indulge in quantitative easing once again. It's already happening. Irrespective of interest rates, we are seeing assets being added back to the balance sheets. That is easing of the monetary policy yet again. The Federal Reserve are supposed to be unwinding, normalising interest rates, allowing the market to go back to normal. A free market is not a market determined by the purchasing or the sales of the Federal Reserve adding assets. Since the 08 crisis, they needed economic stimulus back into the economy. Central banks around the world explored quantitative easing. They reduced interest rates to zero and negative in some regions around the world. They was adding to the balance sheets, adding back capital, adding back into the equity markets, again to create the economic stimulus. And in doing so, the Federal Reserve are blew up an even bigger bubble than they did previously. And now as they're trying to unwind from the balance sheets, again, it cannot be done. The environment we are in the moment is a central bank managed environment. And so what does this mean going forward, basically? You know, what does this mean as an economic outlook in general? Well, I'll tell you exactly what this means. In 2019, we will be seeing negative, no, in fact, sorry, that come out wrong. In 2019, we will see interest rates go back to zero with the extreme possibility of negative interest rates being introduced. Now, I have mentioned this a few times. Again, it's only my own opinion. You know, I may be completely wrong about this, but, you know, considering since our coverage of the dynamics of the market since April 2018, we have been spot on this channel. Considering we're all a bunch of amateurs, we've been extremely accurate in the direction of where the markets are going to be going. So again, we've heard Chairman Powell from the Federal Reserve saying they're going to be patient. There's going to be no more interest rate hikes this year. There'll possibly be one more in 2020. Listen, it's all the bollocks. It is not happening. We're going to see 0% interest rates this year, this calendar year in 2019, irrespective of what the Federal Reserve's outlook is going to be. It's the only way to prop up the market again. Now, moving forward throughout this dynamical change in the monetary policy from the Federal Reserve, what can we expect? Well, already I'm seeing now throughout Twitter and other mainstream media outlets, it calls for already an interest rate decrease. We're hearing prominent figures in the space saying the Federal Reserve increased interest rates too early and a 50 basis point reduction is necessary. Back to the catch-22 situation. Now, it's all well and good, the central banks decreasing interest rates and re-adding back to the balance sheets, but again, we're talking about the production of money, printing capital, printing our way out yet again. The effects of the monetary printing and again the policies is going to hinder inflation. Again, we've spoke about the inflation aspect of things. We spoke about how Powell are now using inflation gauging as an average throughout the year rather than month on month, quarter on quarter. So if we see a 4% inflation rate, don't fear. Don't fear, because the way they're gauging it now is as an average. It's a load of bollocks. Excuse me. Now, again, if you look at the S&P, if you look at obviously the Dow Jones, and yeah, I always do refer to the US markets being the strongest market globally. You know, other markets throughout the world are really struggling. There's been a lot of trouble with the Turkish lira over the past 24, 48 hours. It's not something we're going to touch on, but we spoke about the emerging markets. We've spoken about when we see the knee-jerk into the dollar, the strengthening of the dollar, it has that negative effect on the emerging market currencies. Now, the only difference this time is in 2008, when we had the round of quantitative easing, people jumped into the treasury market within the US. They seen it as a good hedge against what was happening in the economy. The only thing this time is, personally, I don't think it's going to work. What I see happening is reduction of interest rates. Whether we see this 50 base point move, I wouldn't be able to tell you at this point. But don't expect sharp drops down. You know, we've seen the 25 point basis moves upwards throughout the interest rate increases. I do believe it's going to be a lot sharper during the descent in respect of, you know, maybe a 50 point, maybe a full 100 basis point move down. I think the Federal Reserve fund rate currently stands at 2.25%. And listen, ladies and gentlemen, to take that back down to zero does not take a lot. Now, you've got to ask yourself, what is this going to do? Now, people are asking, well, if we go back to 0% interest rates, What the Federal Reserve will be looking at again, if we just look at, for example, the housing market is struggling for growth, it's on a slowdown. If the Federal Reserve can decrease interest rates to 0%, that means mortgage companies can offer better rates to their customers, again to try and inject stimulus back into those markets. I do personally believe we will get a temporary stimulus. We may even potentially breach all-time highs of certain markets temporarily again. But I think this time investors around the world are going to become wiser to what exactly is happening. You know, if we do speak about negative interest rates, for example, for ordinary people like yourself and me, you know, that basically means we have to pay a cost to hold our value in a bank account. Now, yeah, it's a bit of a bummer. You know, if the negative interest rate is minus 0.25% or 0.5%, listen, it's not a great deal of money. It's something we can all deal with. It will be theft across the board when you speak about the middle class, though, because as a combined total, it is a lot of money. But when we speak about institutional money, and we talk about excess liquidity that needs to be stored, that's where serious costs are going to be incurred by negative interest rates. In turn, it's going to promote the fact to get your money out of the bank, get it into equities, get it into the market, let's create some stimulus. Again, it's going to be temporary. If you ask me, it's not going to work. You know, short term, potentially, but as we work our way towards 2020, and as we have always said on this channel, between Q4 2019 leading into Q2 2020, I think that's where we are going to see the recession really start to take its effect. When we talk about the slowdown of the manufacturing industry, of the car sales industry, of the home sales industry, throughout the board globally, we are in a slowdown. It's 100% apparent, and this is why the talks of reducing the interest rates are now circulated. Excuse me again. We've been telling you this on this channel for a long time. It's like we are 6 months ahead of the traditional markets, and it's a great advantage to know this key information which I'm trying to educate yourselves as a community. Personally, I expect the recession to start kicking in within the time frame as I've just allocated. I expect the interest rates to be near zero before the turning of 2020. We will lead into 2020 from then onwards. We will see a slight strengthening in the dollar, in the treasury markets. But again, look at the yield curve inversion. It is the main factor, the main gauging tool that a lot of economists around the world use as a warning of recession. Again, it's something we spoke about. If you look back onto our channel around December time, we went into that in depth to try and educate you on exactly what that actually means in regards of the bond market. And again, I think we're going to see a temporary move over into the bond market. But I think during 2020 and leading into 2021, we are going to see a major global currency crisis. We're going to see the dollar fall off the fucking edge of the world. And again, we talk about the US dollar being the world reserve. We talk about it accounting for 64% of global trade in commodities, in equities, in currency swaps, in all sorts of different aspects of how the monetary world actually works. Now, if we have a currency crisis in the world reserve currency, believe me, that is going to be a contagion that cannot be comprehended nor stopped. Now, this is pretty much what happened in 2008, of course. Apart from the stimulus that was created back in 2008, is not going to work this time. We're going to see banks stop borrowing money to each other because of the condition of the markets itself. And then we're going to be speaking and we're going to be witnessing institutions around the world, including central banks, not being able to move value around as freely because the dollar will not be a stable form of value. The volatility the inability to remain stable will become quite apparent. And it will, in my opinion, freeze specific markets. The debt market is already ridiculous, talking 250 trillion globally. You know, listen, it's a very, I mean, I don't want to call it special, but it is a special time in history of the world. We're talking about the demise and the fall of an empire. And when I say that, I'm talking about the United States dollar acting as the world reserve in current form, as the petrodollar standard. Now listen, it's anybody's guess of where this moves. Are we going back to a gold standard? Are the IMF going to have to come in as the last lender of resort, the last resort of lender, or however you want to spin it? Again, you know, it's all speculation, this channel, but if we can keep a sort of a form of indication of where everything is going, then it's going to help us investors be able to hedge our bets in the correct respective markets. It's getting on this video quite a bit long. Again, you know, Scott's doing a great job talking about, you know, the day, doing his daily vlog videos, which is quite enjoying. I felt that I needed to speak about this at the moment. I really do. I do think when we come to that pinnacle point around 2021, when the dollar, I mean, we're going to have a recession followed by a depression, followed by a worldwide currency explosion. Now, obviously, XRP and Ripple, as you can see by the IMF, the World Bank, various other institutions across the world, the W3C, we even talk about the White House, we talk about, obviously, the banks in the Middle East, Southeast Asia, central banks, Japan. There's a lot of work going on at the moment to make Ripple and its consensus in the XRPL act as that bridge, that intermediary, so value can move freely without having to depend on any one currency. You know, the RTGS system of the Bank of England can easily interoperate with the Federal Reserve and with the ECB. At the moment, the corresponding banking network is key, is pivotal in the transfer of value across the world, for settlement and other aspects in traditional sort of banking, if you like to call it. But again, you know, we've seen all the moves, again with your SAPs, your Temenoses, all the main core infrastructure of banking. It's magical what is happening. It really is magical. And you know, I'm under the firm belief that the Intellectual Protocol will act as the saviour when the corresponding banking network does start to free fall, when the United States dollar has served its purpose for the past 100+ years. A magical thing is on the horizon. It's 2019 now, we've just entered Q2. Listen, 2021 is not far away. It'll actually be here in a blink of an eye. I had to do it, sorry ladies and gentlemen, I had to fucking do it. I believe by 2021, I believe by the US dollar has failed. I believe again during the G20 summits, during the United Nations meetups, again, the Triffin's dilemma will be pinpointed out as the main instigation of what has happened. Jesus fucking Christ with this cough. A lot of people speak about the Chinese yuan stepping up to act as the world reserve currency. Listen, that is not solving the problem. That is just shifting the Triffin's dilemma over onto China. It doesn't solve anything whatsoever. Now, if we look at the dominance of the US dollar throughout the world, I do believe we're going to see a gradual decline, whilst the Chinese yuan has a gradual incline. Now that's taking load off the US dollar, a certain load onto the Chinese yuan, helping give that balance to the world temporarily. Again, it doesn't solve anything, but it does indicate a monetary reset. And I think during the next reset, I don't think we will be having a national domestic currency acting as the world reserve. I think as we move towards the digital tokenized economy, we're going to need a new form of world reserve, a world reserve with a different definition. Listen, the US dollar or the Chinese yuan cannot act as the global world reserve currency in a digital economy. It just cannot do it. We will see CBDCs But we're going to need an interoperability, an interconnectedness of all payment systems throughout the world. And by doing so, the Interledger Protocol will become the pinnacle heartbeat of the digital economy. Now, that's not saying everything will be settled through XRP, but if you think about the fastest, the most secure, the most ideal and logical form of bridge asset to act as that global digital reserve, it's got to be the XRP token itself. I mean, look at the ledger. It's had over 40 million ledgers closed without a slight hiccup. There is no downtime. It's completely decentralized. No single entity throughout the world can control or manipulate the system. Potentially, they could manipulate the valuation. But again, when we're speaking about this job that it is destined to become, you will not be able to manipulate the valuation as easy as today. Now, yet, of course, manipulation exists in every single market worldwide. But one thing I will tell you, as we enter the digital economic revolution, we will need a digital economic machine. We're not going to use a fiat currency like the US dollar, or a fiat currency like the Chinese yuan. We'll potentially see a basket of currencies with XRPL added to, a form of ESDR, potentially. Sorry about this coughing. Or are we going to need a new definition of what a world reserve is, of what the digital world reserve currency actually is? Again, it's fascinating. Again, I'm only speculating. I'm trying to give you the best input that I can on developments across the crypto space and across the traditional markets and the economic sort of outlook as a whole with everything that's going on. You know, there's all sorts of stuff that could imminently create a crisis. You know, for example, Brexit is up in ruins at the air. Are we going to be leaving with a no deal? The uncertainty that will bring to the derivatives market is unfound. We're talking 70 trillion in undisputed derivative products and contracts, complex financial. And listen, you know, the derivatives market, 80% is held by the US and the UK. It's a staggering figure. But there's going to be conflict within those complex financial products. We're going to see uncertainty from an investor's point of view. It's going to be fucking Armageddon. There's too many things now that are contributing. There's too many things that are lining up to make this like the fucking Big Bang of the universe. It's going to be epic. And I personally, I'm enjoying life at the moment. You know, I'm up early here. It's a bit of a shame XRP's moving forward. So listen, I'm happy with the position I've got. I've found peace with my heart. But I think moving forwards, and especially as we surpass 2020 leading to 2021, I think it's going to be so much more apparent how that bond market in the US will just free fall off the fucking face of the earth. It really will do. And then that's going to hold the US dollar as a world reserve in dispute across the G20 nations, the United Nations as a whole. And will call for a new monetary policy be introduced. Will we see the one world governance that the establishment have been pushing for decades? Will we see the one world currency? And when we say the one world currency, listen, the pound's going nowhere, the euro's going nowhere, the dollar's going nowhere. We're talking about the bridge that will be able to move value with no settlement risk, completely averting the corresponding banking network and the old guard monetary system that was introduced in 1972. This has been Love for Crypto. It's been enjoyable. We're getting on to the 30-minute mark. I'm going to call it short at this. I'll try and upload it as fast as I can. The internet where I'm going towards Chester is absolutely fucking shocking, so you have to bear with me. Again, obviously, what's happening with the crypto markets, it's nice, especially those who've just entered recently. You know, they'll be seeing a nice 20% gain. You'll probably start seeing a lot more retail FOMO jumping into the markets. Again, for myself, you know, it's not going to be a popular opinion. I personally see it acting as one big short setup play acting here. You know, we could even potentially breach up towards 6k. But listen, we're still in an official bear market. a 15% green candle for Bitcoin XRP doesn't change a thing. Again, you know, I could be completely wrong. This could be the turn of the tides. This could be the bottom well and truly called in and the reversal of the market, and we could see a non-stop parabolic move over the next couple of years moving upwards. Who knows, it could reach all-time highs. I personally don't think we're at that point yet. I think this is genuinely one big play by the whales, one big short setup. Just be cautious. That's all I'm going to say. It's been emotional.